What is an offer in compromise? Do I qualify for an offer in compromise? Those are two questions that I get very often. So I want to answer them in this video. But before I get into that, for those of you that don't know me, let me introduce myself. My name is Timalyn Bowens, and I am America's favorite EA. I'm also the owner of Bowens Tax Solutions, and we specialize in resolving taxpayers' IRS issues. As an enrolled agent, I'm licensed through the Internal Revenue Service to do tax preparation, tax planning, advising, consulting, but most importantly, tax representation, where I step into my client's shoes so they never have to talk to the IRS again about their tax issue. So let's get right to the questions. What is an offer in compromise? An offer in compromise is a solution for those that have back taxes to pay less than they actually owe to settle that debt with the IRS. Now, it's not a very straight answer to say yes or no that you qualify for an offer. The IRS uses a formula and it's based on 4 things. Number 1, your income. Number 2, your ability to pay. Number 3, your expenses. And then number 4, your equity in any assets. So what that means, let's say you have a $250,000 mortgage, okay? So your home is the asset, but you only have $10,000 of equity within that home. Well, in that situation, you don't have a lot of equity within the home. So depending on how much the debt is, you may very well qualify for an offer in compromise. What the IRS has done to somewhat kind of help you know if you qualify for one or not is they've created a tool, which is the pre-qualifying, I'll call it a calculator. What I'm going to do today, I'm going to walk you through that process. Now, with that being said, I love technology. However, we can't always depend on technology to do what it's supposed to. There will be other variables that will determine if you really qualify for the plan or not. Sometimes the pre-qualifier tool just doesn't get it right. So with that being said, if you want to DIY, by all means, go ahead and use the pre-qualifier. Before talking with someone, go ahead and use the pre-qualifier. The offer in compromise very well may be a legitimate option for you, but you also want to explore the option of an installment agreement, which is just a payment plan. There are several different kinds. Currently non-collectible, which puts your account on hold, or bankruptcy. So let's get here. Let me share my screen with you so I can take you through this pre-qualifier, okay? So here on my screen, this can be found on the IRS website. You want to search pre-qualifier. It will ask you a series of questions to see if you qualify for an offer or not. Another good resource to make sure you have everything that you need is going to be booklet 656B, and you'll also need form 433A OIC. OIC stands for Offer in Compromise. So let me go ahead and read this for you. Use this tool to see if you may be eligible for an offer in compromise. Enter your financial information and tax filing status to calculate a preliminary offer amount. I want to stop here because part of this is going to be based on how big your family is and also where you live in the country. Contrary to popular belief, the IRS does not want to run your life, but they do want your money. That means, depending on the size of your family, they give you an allotment for certain expenses, such as your mortgage, how much you pay for a car, food, those types of things, okay? So it says here, we make our final decision based on your completed OIC application and our associated investigation. So if you got some stuff that looks fishy on there, you may not want to go this route. This tool should only be used as a guide, as I mentioned before. Sometimes technology does not get it right. Although it may show you can full pay your liability, you may still file an offer in compromise and discuss your individual financial situation with the IRS. If this already seems overwhelming and you're thinking about using a tax professional to have this done for you, please keep in mind, check credentials, and even past credentials, you'll want to check reviews for that tax professional. Only 3 licensed individuals can help you with an offer in compromise. Those individuals are going to be EAs, enrolled agents, such as myself, or licensed through the IRS. We can represent taxpayers in all 50 states. Then you have CPAs, certified public accountants. They also can do this paperwork, and they are licensed through the state that they live in. And then last but not least, we have tax attorneys. So like I said, if this is already feeling overwhelming, you most definitely can call on one of those 3 licensed professionals. If you're not feeling overwhelmed yet, then let's go through this form. So the first question is, are you in an open bankruptcy proceeding? I will tell you right now, if you are in an open bankruptcy proceeding, you will not be able to file an offer. So we're going to click no. Have you filed all required tax returns? You have to be in tax compliance before you can negotiate anything with the IRS. So we're going to put yes in this example. Now, if you haven't filed all required returns, you need to make sure that you get those filed and the IRS is actually processed and posted into your account before you can go down this route. Have you made all required estimated tax payments? Estimated tax payments are, if you're self-employed, you should be making these quarterly to the IRS, to the state and local. That's if you're self-employed. If you have income outside of a job, you also need to make estimated tax payments. But if you are a W-2 wage earner, then these payments are made from each of your paychecks by your employer to the IRS. They're withholding that from the IRS with you. So if you're not required to make them, we're going to put NA. If you're a business owner, you put yes. But you want to make sure you answer this correctly so you can get a result that is closest to being right. So let's say in this example, we have a W-2 wage earner, okay? Not required to make estimated tax payments, and that's why we have NA here. If you are self-employed and have employees, have you submitted all required federal tax deposits? That is referring to tax deposits for the Form 941, not the 1040. In this example, we have a wage earner, so that's not required. Oh no, let me see. It started over. Oops. So I am just putting those back in here. All right, so remember what I said, the IRS is going to base their decision on how big your family is and also where you live in the country. Because I'm in Louisville, Kentucky. I'm not going to get the same allotment for somebody that is out west in California because the cost of living is just higher there. So right now I'm going to use my office postal code, which is 40202. I am in Louisville, Kentucky. All right. That's Jefferson County. I have 3 members in my household, 0 over 65. The reason I ask if you have any members over 65, those taxpayers get an additional amount included within their allotment because a lot of times people over that age are on a fixed income and aren't making quite as much anymore. So let's say that the tax debt is $74,000, okay? And the most recent tax year that we want to be in here. So this is going to be important. Let's say that you've owed the IRS every year from 2013 to 2018, but 2019-20 you didn't owe. We're not going to put tax year 2020 in here. We're going to put 2018. All right. So we hit next. Total bank balances. So you have $750. Home market value We said 250 in our earlier example. Let's stick with that. You have 250,000. The current home balance, if you have $10,000 in equity, your loan balance is probably around here. Just the way interest is, depends on when you got in the market. Let's see, vehicle one equity. Let's say you have $4,000 in equity in that one. You have $9,000 in equity in your other vehicle. If you're a married couple, let's just say you're a married couple with one child, since I used information that would apply to me earlier in the example. You've already cashed out your 401k, so we don't have anything in retirement. Other real property does not exist, so that is 0. You don't own an airplane, motorcycle, or RV, so we're gonna have 0 here. You put a little bit of money into Robinhood, so let's just say your stocks and everything are doing good. You put your stimulus check in there, so now you got $2,300 there. We don't own anything else of value, so that would be artwork, furniture, fixtures. As you can see, it has art, coin, and gun collection, etc. Don't have any of that. So gross wages, including Social Security, pensions, and unemployment. Let's put here, say you make $75,000 a year, okay? We get about $56 in interest and dividends because all of your stock have appreciated. They don't really pay out much in dividends, and you don't have much in a bank account right now to get interest. We don't have any distributions from partnership or S corp, no rental income because you don't have any other properties, no business income, no child support received, no alimony, no additional income. All right. So when the IRS looks at your expenses, they categorize them. So rent or a mortgage is also included with utilities. That would be cable, internet, water, etc. So that's why it also asks that here. So let's say your rent with everything else, or I'm sorry, your mortgage with everything else is $2,600 a month. All right. We have 2 vehicles. You're paying $750 for vehicle number 1, $400 a month for vehicle number 2. Those are just the loan payments, and this will say as a lease. Total operating cost each month is $500. You all gas is over $3 again, so that's very realistic. Nothing for public transportation costs. We're in Louisville, Kentucky, so unless you're riding the TARC, you're okay. Which I'm sorry, that's the Transit Authority of River City. That's our bus route. So health insurance premiums. See here, you have a family of 3, so you're paying $1,200 a month for that. Life insurance premiums, currently you're paying $300 for that. Let's see. Typically, when people owe this much, they're not having anything withheld from federal, state, and local. So let's just say monthly total taxes, you only have $3,000 being withheld, no court ordered payments, and right now you're paying $400 a month for child care costs, so you can work. Okay. So once we have this in, we have here from the pre-qualifier, you do not qualify for an offer in compromise based on the information you provided. You have reported expenses of $9,150, and we have allowed expenses of $9,547. Let me go back in here because I realized I made a horrible mistake. Not horrible, but it just didn't do what I was trying to do. So what I messed up on, you have to be careful, and I'm actually glad I did this, so you don't have to do it. You want to make sure that you put in the monthly amount for income. And what I did, I put in the amount for the year. So I put that you make $75,000 a month, and it should be $6,250 per month. Okay. So now that I've done that, here in the offer and compromise pre-qualifier, we see in determining your proposed offer amount, the total available equity is based on information you entered and adjustments allowed by the IRS. Allowable monthly expenses are based on the information you entered, as well as any adjustments to those expenses in accordance with the IRS collection financial standards. So the tax debt is $74,000. You have $5,590 in available equity. Monthly income, $6,306. Allowable monthly expenses, $9,047. So there are two different options when you have an offer and compromise. You can do a lump sum payment, or you can make payments in up to 24 months. So either way here, this $5,590 has to be paid within 9 months, or it has to be paid over 6 to 24 months. Isn't this amazing? Potentially taking $74,000 in tax debt and settling it for only $5,590. But let me give you a heads up. If you have something where you have monthly expenses that are way over the income, not what's allowed, but that's just way over what the income is, you want to be careful reporting this to the IRS, because what's going to happen is they're going to say, you can most definitely afford this, or where are you getting the money to live from? If it's credit cards, I want to also give you another heads up. They will ask you for the balance on your credit cards, and to double check and make sure that you're not lying, they will pull a credit report. So if you have a lot of credit available, they may deny this and actually ask you to put the balance on credit cards to make sure that they get their money. Remember, their job is not to make your life miserable, but it is to get you to pay the money that you owe. So after taking this into consideration, you can prepare an offer. Like I said, the OIC booklet, the required forms are going to be Form 656 and Form 433A OIC. And what this booklet does, it tells the story of your financial situation to the IRS. Now, if you think that you have an exceptional circumstance where the IRS pre-qualifier is wrong, I would highly recommend that you reach out to a tax professional. Now remember, I said to represent you in this type of situation, only licensed professionals can help you. An EA, an enrolled agent, a CPA, or a tax attorney. Now, if you watched all this, you said, man, this was really helpful, but I can't do it myself. You can book a call with me. Book your call at www.bowenstaxsolutions.com. Once you enter the site, you'll want to go to Book Now. There will be a tax relief evaluation call. And once you book that, we'll get an opportunity to connect, talk about your financial situation and what you're actually eligible to go for with the IRS. An offer and compromise may not be the best option for you, but after our call, I'm sorry, I'll be able to point you in the right direction. So until next time, you, my friend, stay out of tax trouble.